Welcome back to the street. Indian pharma giant Lupin out with its Q3 results. Let's get across to Mumbai, where our very own Tanvi Gill has been tracking those numbers. Tanvi?
Good morning, Will, once again. And yes, Lupin is just out with numbers. I'll just read out those numbers, at least the headline numbers on Q3 performance. They have, of course, delivered a net profit of 153 crores for Q3, which is down 72% year-on-year, largely because of the base effect and a deferred tax reversal that we will be talking to the management about. Their revenues rose 4%, so quietish growth on the top line. Operating profits increased nearly 40%, and margins came in higher by about nearly 12% versus 8.9%, but that was also short of analyst expectations of 13.4%. So let's touch base with Ramesh Swaminathan, who's the CFO, Group CFO of Lupin, to get a better understanding of the numbers and the outlook going forward, because sales to the US improved because of their current product portfolio, new product launches, as well as brand expansion. Ramesh, it's good to have you on the show. Thank you very much for your time. Good morning to you as well. First, the drop in net profits, because the top line looks flattish. Operating expenses have been managed well this quarter around. Margins have expanded, but that deferred tax reversal, as well as high base effect kicking in and bringing down your profitability. Do we see that getting corrected in the next quarter?
Yes. So for starters, yes, we have done fairly well this quarter vis-a-vis the recent few quarters, particularly in America, because we began this year on a bad note where the overall sales were pretty low at around 127. The second quarter, of course, saw us actually doing slightly better than that. Q3 has been better, but to be sure, vis-a-vis the previous year, there has been price erosion. There have been quite a few products where prices have come down, which includes albuterol, Brovana, and famotidine. We introduced quite a few new products in America this this quarter. 4 of them, 8 for the full year. That itself brings in about $20 million. Overall, we are fairly okay with the performance in America, but certainly we expect to do much better. But you look at the other geographies, there has been growth in other parts as well. The API division, for example, did bounce back because at the back of, in fact, demand for cephalosporin products across the globe. Acute therapy flu season did pick up, and to that extent we're fortunate. If you look at the performance across, every other geography did fairly well. India was lower than Q2, and that's normal for India. We were also kind of impacted by the loss of exclusivity on certain products on the diabetes front, which we had in license, and that came off patent, and there was price erosion there. So overall, whilst the results kind of indicated a 3.8% growth vis-a-vis the previous quarter, or for that matter, the previous year, it could certainly have been better, but it's certainly much better than what we performed in recent times. And going back to your question on the deferred tax. So the taxation for the full year, we expect to be about 32-33%. There's of course interquarter differences because of the fact that we account for it, or for the way the accounting standards require it to be kind of disclosed. But be assured that the effective tax rate for the company should be around the 32-33% mark.
Okay. Let's talk about a product portfolio, and you highlighted that obviously the genericization of your diabetes product has led to revenues kind of coming down a little bit. What would you do to replace those revenues? What sort of product pipeline do you have to launch products which can give you more traction in India?
Yeah, so we are looking at more feet on the ground. We've continued our efforts and kind of expanding on the portfolios on the products, the therapy areas that we're very strong in, which would be cardiovascular, the diabetes portfolio, respiratory, and the like as well. And of course, bring in newer products from time to time. India, in a general sense, you could expect the secular growth rate to be about 10%. So this year has been, it's been lower because of the reasons that I just said. In the previous quarter, we also lost, in fact, exclusivity on Sidmus, a very important product in the cardiovascular space. So all of this actually did impact this year, but this is an aberration, so to speak. And you would see us bouncing back in terms of growth rates for India, which would be robust in the quarters to come.
Are you worried about the risk of a U.S. recession impacting your earnings, or, being a defensive business, you would ride through the slowdown?
Yes, every business in some ways is going to be impacted by slowdown and so on. But I would imagine that the pharmaceutical business, in the general sense, since it actually impacts on health of individuals, will be a lot more resilient. So whilst I am concerned about the general slowdown of the inflation that is raging across the globe, I'm also pretty optimistic about healthcare in a general sense.
I've got to ask you, Ramesh, I wanted to ask you about the US, but I want to ask you about your costs instead first. They did appear to increase somewhat when it came to manufacturing and other expenses. Is that something that you're going to be focusing a little bit more on moving forward, trying to protect your margins if you have seen a little bit of slippage when it does come to sales?
Yeah, so in a general sense, yes, inflation has been actually impacting us. When you speak about solvents, when you speak about excipients, a lot of it actually comes from Europe. And the ongoing, geopolitical tensions out there, the war out there, actually has impacted all companies in a general sense. And of course, if you talk about a host of other products, commodity prices have ruled high. And if you actually compare 23 prices with, in fact, what was there in 2019, 2020, we're still looking at least twofold increase across, or between 50 to 100% increase across various products. So that's something which is really, and it is really worrisome. Some of them actually are coming down, for sure, but a lot of them are still ruling pretty high, especially the excipients and the solvents piece. That's insofar as inflation is concerned. The other thing which is really sometimes very worrisome is a couple of things. In India, for example, there is this expanding national list of essential medicine, which I think from a government perspective, they would obviously like to kind of do what it takes to kind of protect the prices for the general public, but it does impact the industry's profitability, especially in India. And apart from that, there is this, in some ways, nationalistic fervor across various, countries, and that also impacts in some ways.
Right, Ramesh, finally, would you be able to protect margins at, shy of 12%? I mean, what's the range within which you would be able to manage costs and keep a lid on operating expenses while still trying to maximize operating level performance? What's the range on the margins front going forward? Margin outlook, essentially.
To be honest, we are very disturbed about, in fact, the EBITDA margins that our company is throwing out. That's been because the top line has not been growing as much as we expected to. There's a lot of initiatives that we have been working on over the last several quarters. And with, in fact, top line coming, expanding because of newer products that you'd be bringing to the market. And, of course, working on the various initiatives across various lines, including manpower, and of course SG&A, productivity and the like, and of course R&D expenses, which is pivoting more towards complex products. I do expect the margins to creep up. I would think it should be closer to the 20% mark in the perhaps about a year from now. We will work on increasing it over the next 3-4 quarters, and potentially you could say over the next year, this time around, you should be looking at 20% margins.
Ramesh, really quickly, just before we let you go, Biden in his State of the Union had basically a laundry list when it comes to trying to reduce costs for seniors, capping prices on certain treatment options. Does that impact Lupin in any way, shape or form? Some of the things that he's looking for, if they were to be implemented?
Any effort by the government to rein in prices is certainly going to impact. And this is true across various geographies. We have seen this in the UK, we are seeing this in America, and of course, for sure, in a lot of emerging markets, including India. So it does impact the pharmaceutical industry. But one should also remember that this industry requires a lot more sustenance power, because we need to throw back into R&D. And to that extent, just focusing on affordability by governments is not really going to help our case.
Ramesh, we're going to have to leave it there. Thank you so much for making the time for us today. And thank you so much, Tani, for being here as well. Ramesh Swaminathan from Lupin. Mandy, over to you.
Thank you.
Well, thank you very much for that. Well, let's turn our attention